Are you ready to unlock the secrets hidden within price charts? Technical analysis is the cornerstone of modern trading, helping traders decode market movements and identify opportunities. But how does it work, and why is it so powerful? In this video, we'll dive deep into the world of technical analysis. Let's get started. Introduction to technical analysis. Technical analysis is one of the most widely used tools in the world of trading. It's a method of evaluating market trends by analyzing past price movements, patterns, and volumes to predict future price behavior. Unlike fundamental analysis, which focuses on the intrinsic value of an asset, technical analysis is all about the numbers. Price and volume are your primary indicators. But what makes it so effective? Let's break it down. Core principles of technical analysis. Technical analysis is built on three fundamental principles. Price discounts everything. This concept assumes that all available information, be it economic news, market sentiment, or company data, is already reflected in the asset's price. Essentially, the chart is a comprehensive summary of market behavior. Trends and patterns. Markets move in trends, whether upward, downward, or sideways. Recognizing these trends and their underlying patterns is key to forecasting potential price movements. History repeats itself. Human psychology plays a significant role in market behavior. Patterns and trends observed in the past are likely to occur again because traders and investors often react similarly to comparable market conditions. Key components of technical analysis. To perform technical analysis effectively, you need to understand its building blocks. Charts. Charts are the backbone of technical analysis. The three most common types are line charts, bar charts, and candlestick charts, with candlestick charts being the most popular due to their detailed representation of price movements within a specific time frame. Indicators. Technical indicators such as moving averages, MA, relative strength index, RSI, and the MACD, moving average convergence divergence, help traders identify trends, momentum, and potential reversal points. Volume analysis. Volume measures the number of shares or contracts traded in a given period. High volume often confirms the strength of a price movement, while low volume may indicate weakness or consolidation. Types of technical indicators. Technical indicators are divided into different categories, each serving a specific purpose. Trend indicators. Tools like moving averages and the average directional index, ADX, help traders determine the direction and strength of a trend. Momentum indicators. These, like RSI and stochastic oscillator, measure the speed of price movements, indicating whether an asset is overbought or oversold. Volatility indicators. Bollinger Bands and average true range, ATR, reveal how much an asset's price fluctuates, helping traders gauge potential risk. Volume indicators, on-balance volume, OBV, and Chaikin money flow provide insights into the flow of money into or out of a security. Support and resistance levels. Support and resistance are crucial concepts in technical analysis. Support. A price level where demand is strong enough to prevent the price from falling further. Resistance. A price level where selling pressure prevents the price from rising higher. Traders use tools like Fibonacci retracement and pivot points to identify these levels. These markers help in deciding entry and exit points for trades. Chart patterns and candlestick patterns. Chart patterns and candlestick patterns are visual cues that indicate potential price movements. Chart patterns. Examples include head and shoulders, double tops, bottoms, and triangles, which signal trends or reversals. Candlestick patterns. Patterns like doji, hammer, and engulfing candles provide insights into market sentiment and potential reversals or continuations. Understanding these patterns can significantly enhance a trader's ability to anticipate market behavior. Limitations of technical analysis. While technical analysis is a powerful tool, it isn't without its limitations. Market noise. Short-term fluctuations can produce false signals, especially in highly volatile markets. Unexpected events. Sudden news events, geopolitical crises, or economic changes can disrupt even the most carefully analyzed trends. Subjectivity. Interpreting patterns and indicators can vary from trader to trader, leading to differing conclusions. For these reasons, it's often best to combine technical analysis with other methods, like fundamental analysis or sentiment analysis, to form a well-rounded trading strategy. How to get started with technical analysis. For beginners looking to dive into technical analysis, here's a roadmap. Learn the basics. Familiarize yourself with charts, indicators, and common patterns. Start by studying books or online courses dedicated to technical analysis. Practice with demo accounts. Many platforms offer demo trading accounts where you can test strategies without risking real money. Backtesting. Use historical data to test the effectiveness of your trading strategies. This helps refine your approach and build confidence. Remember, consistency and discipline are key. Mastery of technical analysis takes time and practice. Conclusion. Technical analysis is an invaluable skill for traders, providing insights into market trends and helping make informed decisions. By understanding charts, indicators, and patterns, you can better anticipate price movements and build effective trading strategies. However, always remember that no method is foolproof. Combining technical analysis with sound risk management and a clear trading plan is essential to long-term success. Here at Trader Wall, we're committed to helping you navigate the complexities of trading. Stay tuned for more insights and strategies to enhance your trading journey. Thanks for joining us on this journey into technical analysis. Whether you're a beginner or looking to sharpen your skills, understanding this powerful tool can transform the way you trade. If you found this video helpful, don't forget to like, share, and subscribe to Trader Wall. Your trading success is just one click away, so stay tuned for more insights, strategies, and expert tips. Until next time, happy trading.